In this video, we're going to talk about how I used a covered call with dividend capture play. Absolutely worked out perfect, where I still own the shares after the X date. A whopping $3.22 per share. And my covered call strike price and expiration seems to have worked out perfect. Stick around. I know you're going to like this one. All right, so let's get right to this. We're talking about CHRD, a covered call with dividend captured play that absolutely is working out beautifully. But I want to talk to you about the steps and how we get there, right? How do we get to success using a covered call with a dividend capture? And there's a couple parts to this that help us become successful using this strategy, okay? First of all, using the upgraded CTP dashboard, premium dividend dashboard, we found CHRD this month. Typically what we like to do is sort the quarterly dividend column. What we're looking to do is generate about $1. Because what I've found over the years is that I can generate $1 for the dividend capture part of it. And then when I write the covered call, usually can collect the same amount, if not more, on the covered call side. So we're kind of double dipping, right? Love double dipping. But again, there's a strategy. I'm going to show you the strategy here in a moment. We went to that premium dividend dashboard that gets uploaded. It's over 500 stocks that are going to have an X date in the next week. Okay, week to 10 days, depending how many dates I pull. 559. So this is a great opportunity to just look at the different stocks that are paying a dividend. It could be anything from a company to a closed-end fund to an ETF. Love sorting the quarterly dividend number, and then what we do is we research it. This is not a static PDF where you can't research within the file you're working with. So what we do, we use the premium dividend dashboard, and then we use the jump links inside of the dashboard to confirm all of the numbers. Absolutely love checking the dividend by just clicking one of the jump links, and we can confirm what that dividend is going to be. It's also great for the earnings too. Love clicking the button that sends us over to the website that shows us what their earnings date is going to be. That's the premium dividend dashboard. It's included with the upgraded CTP dashboard. We went ahead and found that stock. Could not believe CHRD was trading for $142. Usually a stock that pays $3.22. You know, their share price is usually going to be in the thousands, right? No, CHRD, $142. Now, when I sent this Seeing the World Through My Eyes trade alert to the members, did a video on this. I decided that doing a video was going to be more educational than me sending out an email. So we talked about using CHRD for a covered call with dividend capture and the exact strike prices we were going to use. We talked about when we were going to buy the shares, what strike price we were going to use, and what the expectations are of the trade. Because I'm going to show you in this video the expectation, because we can go from just making a little bit of money to absolutely max value if our shares are not taken away. In the coming slides, I'm going to show you the setup of this trade. And I'll tell you what, if you've never done this before, where we buy shares, we look to capture the dividend, but yet we also write a covered call, this is going to blow your mind because I do this all the time. Okay, let's go ahead and take a look at the setup for this trade. And by the way, that is the upgraded CTP dashboard membership phone app, for which you can watch all of the exclusive videos inside of the phone app. You get no YouTube commercials, and you can watch it anywhere you're with your phone. I want to show you how the ex-dividend works. This is a screenshot over the weekend of CHRD. It closed at 142.73. Notice that its after hours price is 142.75. It has not gone ex-dividend yet. This is closing numbers on Friday. Okay, it's the weekend. I log in to see if they've taken my shares, and they did not. We're going to talk about that here in a moment too, so I want you to stick with me. So if you don't understand what an ex-dividend does or impacts the stock, you're going to see this here in a moment. The stock will open up the next business day or on its X date minus the dividend. Okay, it's as if they took the money out of the company, which means they take the money out of the share price. I'm going to show you what CHRD trades for this morning, Monday morning. Today is its X date. Notice right here, it has announced a $3.22 dividend for the X date of May 15th, today. Okay, so understand how this works. If I'm the owner of the shares on Friday at the close, I'm going to be able to collect the dividend because I'll be the shareholder on record. Come Monday morning, the stock will trade ex-dividend or minus $3.22. Now, here is the deal. When we set up a covered call with dividend capture, we're looking to walk the line where we're looking to collect a covered call premium where if the numbers do not make sense for the call buyer to take my shares to collect the dividend, they won't. They won't step in. So that cover call premium has to be perfect for the stock to trade a bit, and then we get to the close on Friday. Now the question is, do the numbers make sense? Do the numbers make sense? Meaning, if the call buyer has to take my shares at my strike price, add the cost of the cover call premium, and when you deduct the intrinsic value out of that trade, does the $3.22 dividend they will collect make sense to be profitable to take the shares early? Remember, this is early. This is a 37-day trade. So this would be taken literally within a week. The call buyer has to be profitable. And in this case, it traded absolutely perfect where it was not profitable. Now, this is where the market closed on Friday. I want you to notice the 142.75 after market. Now let me better explain how an X date works. So for a lot of you, you understand this. An ex-dividend date is when the stock trades less its dividend it's sent to the shareholders. So on Friday, okay, the stock's trading at 142X, it's moving, it's grooving. When they close the market Friday night, at that moment, the company distributes its dividend. In theory, they don't pay the dividend for possibly weeks later, but the dividend is pulled from the company's value, right? Market cap or stock price. I'm going to show you what that looks like here in the next slide. But here's the deal. If you are the shareholder the night before the ex-dividend date, you collect the dividend. So this lays it out perfect. Okay, I'm just going to read this for those that absolutely are listening to this while they're driving, like a podcast. Here's the way this works. On Monday, CHRD will go ex-dividend, meaning the stock will trade lower to reflect that payout. In other words, the stock will likely trade $3.22 lower than it would have opened any other day. In order to be eligible to receive the company's dividend, shareholders must own the stock prior to the ex-dividend date, i.e. today. Okay, shareholders who own CHRD as of Friday's session are eligible to receive the $3.22 dividend payout. Imagine that. Every share you own, you're going to collect $3.22. Well, in this case, I did one contract, and that's 100 shares. So I will pocket the $3.22. So I hope you understand how the ex-dividend date works, because now we're going to talk about using that covered call element. If you're trying to collect that dividend while writing a covered call and using an in-the-money strike, we haven't talked about that yet. The trade I'm using an in-the-money strike, which almost guarantees me I'll have my shares taken away. Let's go ahead and look and verify that this morning it traded ex-dividend. Now, before I show you the trade setup that I sent to the members and what I ultimately did, because remember, if I send out a seeing the world through my eyes trade idea, I already have my toes in the pool, right? I'm probably going to do the trade. Well, here's the deal. We wake up this morning. Notice how the stock closed 142.73. This morning, pre-market, it's trading ex-dividend. Do you see that? The very first tick is going to be $3.22 less the 142.73. Now, where the market goes from there, nobody knows. But the very first tick will be minus $3.22. A lot of people do not understand how an X date works. So I hope that very quick explanation helps you. Feel free to comment if you have further questions, right? You have a payable date, record date, X date. You know, when it comes to the dividend, it gets kind of cloudy. But just understand, the ex-dividend date is the very first day the stock will trade minus the dividend it's paying out to its members. If you have a question, put it in the comments. There's so many smart people on this channel. They could help you get closer to your understanding of how dividends work. Okay, so real quick, let's talk about the trade. I bought 100 shares at $140.72. I then turned around and sold that one contract. Remember, one contract equals 100 shares. It was an in-the-money strike, a 135 in-the-money strike. So that means they're going to take my shares away from me cheaper. So I'm going to lose money, but that covered call premium is going to cover that expense. I did the June 16th expire. Now, the reason for that is I wanted to throw it out there a little bit. This investment can clearly go 30 to 40 days for me. It's not a biggie. We're just going to go ahead and keep this on the book. So I put it out there so I can collect a bigger dividend. And also, I wanted to entice the call buyer for more time, right? If we were in a very tight window where I placed this trade this week and closed it next week, I would get less covered call premium. But also, I'd be putting the call buyer on notice. They have to make a decision to buy my shares. Now, putting it out there for 30 plus days, the call buyer doesn't take my shares at 135 to collect the dividend. They are then going to probably let it go to expiration. And then the question is, are the shares trading over 135? And if they are, they'll take my shares. I could also manage this trade a little bit. We'll talk a little bit about that here in a second. Here's the deal. Possible $1,172 profit in 37 days. You can see the trade right there. This is what my total income tracker looks like. And you can download your free total income tracker at my website, cptdashboard.com. I don't spam you. I don't sell you nothing. Now, you have to keep the numbers in front of you. And here's what the numbers look like. 3 possible outcomes. I'll be quick. You can read it on screen. My shares are taken away at expiration. I collect the dividend. That's $6. $6 total. Again, this is all based on what? This is based on me having the shares taken away at 135. That's why these numbers look a little bit smaller than what you would think. If my shares are taken prior to expiration and not collecting the dividend, I only make $2.78, but still that's 2% in what would have been like 5 days. Now, we're beyond that, so now let's talk about if my shares are not taken at expiration, they expire worthless, I'm going to keep that entire $11.72. That's the $3.22 in dividend, the $8.50 in covered call premium. I still own the shares. Cash on cash for this money invested would be $1,172. We'd still have our shares. And at this point, if the stock is trading in and around that 140.72 number, we can then write another 30-day covered call, collect a decent premium, and we continue the trade. Now, if it trades below 140x, then I'm going to have to manage the trade, right? So when I write that next covered call, and if the covered call strike price is below my stock purchase price, well, yeah, I'm going to have to work it a little bit. I'm going to have to make sure I manage the trade so I do not have my shares taken away lower than my stock purchase price and losing money. Now, some will say I have $11.72 of downside protection, and that's very true. If you're someone that uses your premium and dividends for downside protection, clearly I have $11.72 for downside protection, but you know the deal. I'm using this $11.72 in retirement, paying the bills, living the good life. So my cost basis for these shares is $140.72. Now let's go to the charts and take a look at where the stock's trading right now. Now, just finishing up the video here, let's talk about where this trade could go. We clearly know that this is a 37-day trade. So we have a time window way out here, right? So we were able to get past the very first hurdle, and that's the dividend. You see it right there being distributed to all of the shareholders. Now, I received that, so we get $3.22. Now the question is, where does the stock go from here? Well, I outlined that in the video I sent to the members where right now we're in a very interesting trading range with CHRD. Look at this. This goes all the way back to February where it is absolutely trying to break through resistance here. But here's the deal. Outside of this, where the market is just getting worked, oil falls, right? This is being an energy company, and a lot of its stock movement is based on energy and oil. Look at this trading range, man. This is right down the middle. This is what we're looking for, right? And when we're looking to get involved with stocks like this, the bigger picture is this. We want to get involved when they're trading here, and only in certain situations do we ever get involved when they're up here, okay? If there's anything in this video you take away, this is it. Do not bite. Do not bite when stocks are rallying and you catch yourself up here. One thing I've learned over the years is Wall Street does not leave profits on the table. That's why you never see anyone's chart like that. Okay, straight up, no way. You always see a nice run, profits, for no other reason, taking profits off the table. And then guess what? They're all like sheep. Once some big player takes profits, they all take profits. And guess what? When it comes back to support, guess what they do? They come back and they start buying it, and here we are again, okay? So we always want to get involved when a stock is trading at its lower 25 percentile, right? If it's a special situation like trying to capture a dividend, we understand we're getting involved higher, and we have to have a plan. Okay, I truly understand that we're at resistance. This thing has not broken resistance for what seems to be a year. So I understand if I'm buying shares up here, it can fall. So with that playbook, right now, this trade is executing exactly the way I like it. For right now, we're on track. If you enjoyed this video, man, bang that like button. It lets me know you like what I'm doing, and subscribe to the channel. You can see I'm doing more and more videos that really up the game when it comes to cash flow. We need monthly cash flow to live the life we want to live in retirement. Without a monthly cash flow stream, you are absolutely not going to be able to live the good life. Okay? Subscribe to the channel, bang that like button. And hey, look, head over to Facebook and follow my Real CPT dashboard page. Look, I post up a lot of stuff there, and I'm going to be continuing to post more stuff there. I'd love if you did that today. Hey, look, we're going to leave it there. Go get your 1 free month membership. Absolutely killing it over there. I have a covered call and or a cash secure put trade alert coming to the members probably in 3, 2, 1. Yeah, that's right. I already have it dialed up. I'm going to send it out to the members after we finish here. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.